CPI inflation rose. What does that mean for the real estate industry? We're going over that article and many other articles in Real Estate Daily. Welcome everyone, my name is Troy, and every day we go over the latest in real estate, mortgage, and the housing markets. Now, before we jump into anything, hit that subscribe button, bing, bing, and then hit that bell button, bing, bing, and ring my bell, baby. Let's jump right into the articles. CNBC, now we all heard about this morning. If you haven't, CPI numbers actually rose 0.1%. Everyone expected to go down. All this FOMO about how great things were going from 9.1 to all the way down to 8.2. I kept telling everyone, everyone's too excited. This is all about, more about, to me, the elections coming up than it is about inflation. And now inflation rose, and it rose even though gas prices went down. Now, I've been seeing gas prices go up at the pump in the last week or so we're going to see something different. But how does this affect the housing market? Well, I think we're going to see another jump in rates, but that won't happen until we get closer for another week and a half, until we see the Fed get together. And I believe, like I've been saying now for the last month and a half or so, it's going to be 75 basis points. What's really crazy is that when the CPI numbers broke out this morning, they even talked about a 19% chance that we're going to see 1% raise. I don't think that's ever in the cards. I think that they can't raise that quickly because, again, we have elections coming up and it will really hurt one of the parties really bad. And I think that that's not actually what is going to happen. Next article, which is kind of the connect the dot. Inflation isn't about fuel costs anymore as prices increase broaden across the economy. Now, the majority of the CPI number or the inflation numbers it's about housing and shelter, and we're seeing that rise, and we're still not even close to what we really feel it is. Most of the associations out there, real estate associations or rental associations, they're saying that we're right around between 10 and 12% year over year rise in rents. And about 15% year over year rise in housing market, even though that's kind of been going down every single month. Well, with that being said, we're still, I think there's a gap there. And if gas goes up or energy goes up as a whole, and we're thinking about natural gas prices going to go up, and we've heard it here in California about rolling blackouts, we could see that number go out. But I'm going to go in more detail in California because I think California is causing its own inflation and it's causing more and more issues here. The governor is just not, he only cares about votes. He doesn't care about the actual citizens. And we're seeing more and more people leave this state. Next article here says, this is very interesting. It says HELOC volume up nearly 50% of the first 5 months of 2022. Yes, it was, because that was the last chance people were able to pull money out of their house. Now, what I didn't like, and I kept telling people, you have to be very, very careful about a HELOC. A couple things. If you actually take the money off your equity line of credit, you're getting charged a significantly higher rate. And if you hold that money and you simply put it in your bank account is not making up for that, for the interest rate. So you're losing money. So if you're going to apply it, it needs to be into emergency situations, or it needs to be into something in which you can actually gain equity. Putting that money, and I hate to say this, but I've heard it many, many times. People pull money out of their house, they turned around and they put in the stock market, they put in the crypto market, and that is not the way to gamble. You have equity. It's not to gamble. It is a cushion, a pad in which you are enjoying your retirement fund in the future and not blowing it today. I say that, but I saw that volume out getting crazy. Today, HELOCs are going away. They're disappearing off the face of the earth, or they're just so high. The rate is so high, it's ridiculous. I caution people getting HELOCs. Next is another CNBC article, and one of our good guys here, Logan from Housing Wire, says rent inflation can't sustain itself. Yeah, you can't go 10% or 12% year over year. But we can see it go up 5% year over year. And that is still significant. Imagine if you have a choice, you buy a house, which if you look at this, the media out there, including CNBC, they're saying the housing market's falling apart, or you want to rent. Well, one thing is when you buy a house and you're on a fixed mortgage rate, you're paying the same every single month. And the best thing about that is that somewhere down the road, you're able to refi into a lower rate. It's going to happen. It's just natural. It's happened over since the dawn of mortgage rates. You know, somewhere 5-10 years, even a year later, you can refi out. But rents don't go down. Your landlord is not going to go knocking on your door. Hey, you know what? Guess what? We're going to lower your rent 5% this month. No, it's just not going to happen. He's going to continue to raise it. I continue to raise my rents anywhere that I can outside of, you know, rent restricted areas. So you got to know that even though it can't sustain 12%, it's still going to be at the 5-6% level. And if you're a renter, you're going to feel that pain. And last article, where did rates go yesterday? Because today they're significantly up. Well, again, if we're looking at, you know, conventional and FHA, they're pretty flat. You know, we're looking at jumbo, went down, you know, 10 basis points. Like we said, that jumbo has been just flying. Jumbo and 15-year conforming have literally been so volatile. It's been ridiculous. But yeah, you start looking at the charts, it's just jumping up and down. Look at that jumbo chart. It looks like a heartbeat ticker tape, you know, boom, 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 boom. Crazy, crazy stuff. But absolutely, guys, when you get a chance, you know, take a look at these charts on interest rates. If you're on the sidelines looking for a home, one thing you need to know, rents are not going down. Rents are only going up. And if you're sitting on the sideline, when the housing market, if we do crash, they make it impossible to get qualified for a loan. I've said this 100 times. Your little pre-approval letter that says it's good for 90 days is only good in conditions of which at the time it was printed. If they change everything tomorrow, such as getting rid of HELOCs or completely getting rid of refis, that happened overnight. That wasn't I had a little piece of paper that said I could get it for the next 90 days. No, they'll kill it all in one night. So you know, I want you to make that decision. If you're sitting on the sidelines, you know, right now is a really good time to buy. Why? Because I'm locking in my rates, right? I'm locking in my payment. If I feel comfortable with that payment, so should you, right? That's how you want to look at it. Guys, thank you very much for joining us. Hit that like button if you like the content. If you have any comments, leave them below. Let's go ahead, and I'm more than happy to either, you know, hear what you have to say, debate you, or, you know, come up and congratulate you for buying a house. I really enjoy when I see people buy homes. It's the best investment you will ever make. Guys, take care, and I will see you tomorrow.